Happy New Year, Auvorians. Today is the 2nd of January, 2021. Don't forget to write that on all of your documents instead of 2020. It's always a mistake I make for at least about a month. So, my name is Steve Vetterl. I am the CMA, your Chief Market Strategist on the microphone. Saturday morning, risk disclosure. Let's get it out of the way. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Also, if you guys could, we're set there. Let's just go with this. Trading on margin utilizing leverage can carry an even higher level of risk and lead to a complete loss of investment funds. So before deciding to trade the foreign exchange markets using any of our software products or alerts, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially lose all of your capital. Sounds terrible, doesn't it? So please trade with capital that you can only afford to lose. If you're sharing any of the results of any of our software tools, which is really only allowed in the designated Facebook groups, and that will carry through to the Telegram channel, please do not use the term company recommended settings. Auvoria Prime does not have any recommended settings. We're not a financial advisory firm. We just license software that you can use at your own risk and discretion. You have settings that you can choose. Many of them are out of the box default that can be adjusted. We have nothing to do with your brokerage account. We are not a broker. We don't recommend trades. We can't see inside your account. Only purpose of the expert advisors, our algo software, is that it can, in some cases, execute trades in your account. So if you're sharing any of the settings, we're not company recommended. Please stay away from that nomenclature because it's really for educational purposes only. So to anybody joining us late, welcome. Happy New Year. Hopefully 2021 will be much better year. Because 2020, for many people, it stunk. And our thoughts and prayers are with those that were affected by all the baloney going on globally. Got some vaccines coming out now. Maybe that will get us back on track. So, let's take a quick look at the Forex Factory calendar and make some quick comments for those of you who want to take off real quick, and then I'll get into my usual deeper dive a bit later on. And let's just check the calendar here. So we got today's Saturday, the 2nd. Trading resumes tomorrow, the 3rd. This whole week here, and make sure I'm sharing this screen before I run. There we go. So this whole week right here, we're up back, New Year, holidays over. We're actually taking down our Christmas stuff today and kicking the tree out. It's time to start fresh with a new plan. So my plan is going to be, once we get past all this election melees on the 6th of Wednesday here in the United States, probably going to be taking a closer look at getting back into doing some trading. I got one person that just sent me a message. You guys hearing me okay? You guys all good? Am I sounding like an annoying individual on the mic? All right. So I'm planning to be trading a lot more actively this month. I'm actually going to show you guys some stuff here that I'm going to be doing myself. But just taking a look at the calendar, Forex. Yeah, that's pretty much it for the date. All right, so if you don't know how to set this calendar, just click on this little green button, get rid of the orange and yellow, and then you're good. So next week, tomorrow, bank holiday, Sunday, essentially last day of the holiday for many kids, including our children. We'll be going back to virtual school, which totally stinks, on Monday. So let's hope that changes as well in the new year. So we got some OPEC meetings. Maybe things will actually finally start to heat up in the oil front. Although frankly, I think oil globally is due for another dip again since the demand is somewhat falling off. Do note that the most important thing for anybody trading anything related to US dollar, which seems to have its feet firmly planted in almost any currency's path of trading these days, right? The unemployment rate, what they call the non-farm payrolls, are Fridays. That's the unemployment for December. I have no idea the forecasts and whether or not they will come to fruition. You can always look at the forecasts here. I don't pay much attention to forecasts until the number actually hits. And quite frankly, most of these numbers that are pandemically generated probably don't speak much to the future anyway. So looking at FOMC minutes, I think Wednesday is an important day. The electors are going to be cast on Wednesday. That should be an interesting mess if that's brought up. And the FOMC minutes coming out, I think there'll probably be some comments on here. I would expect the US dollar to continue down this week, albeit now that the sort of second bailout has been at least partially released from the IRS and US Treasury to some Americans, started receiving payments last week. There's a chance the news may be baked into the dollar. You know, who knows? Maybe I'll be bullish on the dollar for a little bit. I think it certainly would give a lot of trades in some of the dollar-based currencies a chance for some sort of a retrace back up. Could be wrong, and we could continue down. I think we are due for somewhat of a bounce, but it's impossible to time when, how, what magnitude, all that fun stuff. So the Q&A window is open. If you guys have any questions, feel free to ask away. We always start off with equities. You may not be at all interested in equities. That's fine. I do think that in your careers as investors, I definitely think you should be an owner of equities at some point as additional diversification inside a portfolio. S&P all-time highs. Fighting the Federal Reserve and most global central banks is proven to be a futile endeavor at best, as markets have completely lifted in what was a pretty darn good year for anybody that participated to a large degree in equities. Okay. So that being said, take a look at gold. Looks like it's ready to burst higher on just dollar weakness. Notice the sort of wedge that's forming here. It looks like we could definitely blast off a little bit higher. DXY, our main focus here, dollar. This is tradingview.com. Each of these candles represents a single day of a business day of trading. And we are looking at the whole, about the last 9 months. And realistically, we've spent some time. We broke under the what I view to be the true line in the sand, which is 92 right here, broke lower. We've continued to trend down. I think that it's possible, could be wrong, and we can always be wrong, so you got to be looking for holes in one strategy, right? We could possibly have a little bit of a balancing again. I don't know. There's a lot of things that still got to be settled out in many different countries that could affect the dollar and or our own country. But typically, it's been a devaluing process in terms of the value of the dollar the whole year. And a lot of that is due almost exclusively to the trillions of dollars in stimulus that we have added to the balance sheet throughout the year. So the tough part is when you're coming into a new year, already sort of behind in the race, if you will, is putting out, ideas to help, at least reduce risk or have an idea where one thinks the dollar could headed. I mean, long term, even midterm for that matter, coming into the first part of this quarter, I do think we could see 87 on the dollar. It's possible. We could spend, since we've had a fairly decent movement, we could spend a number of weeks balancing. It's really hard to tell at this point. So when you're looking to do these types of forecasts, and recently I've always wanted to start with the dollar because I think it's really wagging everything around at this point. It's going to be key to see what the FOMC says on Wednesday. So The other tough part as risk manager is knowing when, essentially after the new year, to get in and start trading. We've got arguably a lot of bubbles that are forming, and the bubbles and the recognizing of the bubbles are not a difficult thing to view, especially from a lofty trading levels. A lot of things are at in non-Forex land. The tough part is trying to time it. It's not recognizing that we are present in a lot of different types of bubbles. It's when they pop and what's the magnitude. That's what's almost impossible to forecast. It doesn't do you guys a lot of good, right? Because you want to know, hey, what's going to happen? And, how do I trade accordingly? So let's take a look at the Euro US dollar. Now, so it's a long consolidation you see here throughout a good chunk of the latter part of the summer moving into Q4. We finally broke out of this level and continued to trend higher. Looks to me like, just as almost an inverse, if you will, of the DXY. It looks like we could probably spend some time balancing here. A lot of the strategies that are offered, many of them martingale based, actually do pretty well when markets are not trending. Okay. So when they're trending up, obviously win rates are much lower on the software taking any type of short, as is the case as a chart pattern with anything that breaks out, right? Whether it's higher or lower, the direction of the trend is always the best way to trade. And I really think, as I'm going to talk a little bit about it in terms of the educational aspect, I really think that you guys should be, if you can put it in the budget this year. By the way, I always start the year off with a budget. So I have a budget for the Vetterl family. I have a budget for 3 businesses we run. So I try to always start off with an expectation of, what can be spent, what needs to be cut. We don't have a lot of froth, if you will, in our budgets. We keep them pretty lean. And it's a good way to sort of gauge whether or not I can afford to add an extra license or two. But if you do decide to do that, I really think it would benefit everybody if they added Arrow to the pie, right? So in whatever license you have, or you can switch to Arrow and have a couple of different strategies in place. If you're a Gearbox or a Variable fan, or you're Einstein or Alexander, you can certainly augment that and have some additional levels of diversification. Just understand that with Arrow, as high as the win rates have been, it has become profitable, very much so, because of the time that the successful traders have put into learning strategies. There's a number of them. Some will have their day in the sun, some won't, right? But if you understand all of the 6+ strategies that Nathan and his team uses, it will add an additional level of diversification, which reduces risk. All right. What else do I want to say on this? So if we do have, I'm getting a couple of questions on the retrace, right here, right around 21 would be a decent point to come back to. From there, it's a matter of, do we continue to balance in a 23 to 21 area, which I think is a fairly safe assumption just looking at the charts, right? Just balancing between these levels, and which case it the win rates are higher accepting trades for balancing inside that. The problem I have is being, from the old school, if you will, of manual trading. Whenever something breaks from any correctly structured base, which this very much is a correctly structured base, I typically don't like to fight against it. So vast majority of drawdowns in all of our software comes just from the standpoint that it is a martingale strategy that is fighting the trend, right? So that's why, again, diversification, taking some of your own trades. You don't have to get caught in that kind of drawdown if you want to take your trading to the next level and go into some additional diversification or learn technical analysis deeper. So I've posted on my Telegram channel 2 books, and I think I posted these earlier in the year as well, but Tom Bolkowski's candlestick chart patterns books, written a number of years ago, Khan's book on technical analysis. They are 2 of the best. I have them sitting on my desk. I'm constantly using them. They've been written a while ago, but nothing really has changed much in chart pattern land. It's being able to recognize these patterns. If you guys want to get into a little deeper dive in 21 as far as teaching yourself technical analysis, we're only just going to stick with candlestick patterns, support and resistance, and moving averages. We can layer in some additional pieces like I do with volume and time-based profiles. But let's learn this first, get everybody up to speed on understanding candlestick patterns. There's a bunch of them out there. Many of them just continue to set up perfectly over the years and continue to pay for those that recognize and get on board. So as I get down off my podium, the key thing to understand in any of this is if we do retrace, you're usually going to retrace back to a prior support and resistance level, sort of like a first step. And I would look to the 21 area for that to be. So let me see the questions here. See the insurance telling let's probably get hit on you. Yes, happy New Year to you as well. Yeah, I mean, between the 5th and I always like to pull a calendar up here. So we have the Georgia runoff elections for those that are not in the United States. It's a runoff that's going on the 5th, and then the electoral counts on the 6th. There could be some disruptions in how these 2 days play out. I do expect some objecting, if you will. So I don't know whether that adds any volatility to the currency markets globally. I don't know the answer to that. But it certainly could add some volatility to equities. So, and possibly into currencies as well. So if you did not trade this week, especially since non-farms Friday, the markets will start to be getting a whiff on both Wednesday and Thursday, the 6th and the 7th, what may be an NFP number, right? If NFP numbers are really bad, maybe there's a chance the Federal Reserve comes out with more quantitative easing, which essentially is just throwing cash upon America, landing in primary dealer accounts. Bad for the dollar, right? It's certainly could be rife with risk in the next few days. So with that question that was asked, if you guys did not trade, that's okay. But the great thing about this is that if you have a manual trading product like an Arrow and you've learned strategies, join their class and, sort of run along with them as they trade, you don't really care what happens on what day, because you take the patterns, and obviously even with manual trading, you're not going to step in front of a news story, right? So you always want to be cognizant of, notice this Forex Factory setup, and the way I always show it is, let me just do a refresh here. It's always set up for Pacific time, the way I cut and paste the screen and put it in my notes. But make sure this is adjusted for whatever the time is in your part of the country. Don't go off my times here because it's almost always Pacific time, okay? But know when these events are coming up, right? And if Governor Bailey's speaking at 6 a.m., I probably don't want to be trading anything related to GBP, right? Just let it play out a couple hours if you're manually trading. But one of the great things of adding an additional piece of software to your arsenal, if you can afford it, or at some point down the road when you can, you're not as concerned about these events. You're just concerned about, one of the 6 strategies setting up if you're trading Arrows, an example. So just keep that in mind as you're going forward. Okay, let's delete some of these. Hi, Steve. I read an article from Goldman Sachs which said the dollar needed to keep going lower for the medium term in order to finance the debt now created from QE. If I understood it correctly, do we pay much attention to banks saying this? Goldman's one of the better ones out there, whether you have the skull and crossbones opinion of Goldman as I do. They still got some really good analysts. So I pay attention more to Bernstein's research, and they're basically just like a merchant bank, sort of like a esoteric type of investment bank. But it's possible. I mean, Jerome Powell and his governors and all their meetings last year have signaled that they're going to continue printing, and for the foreseeable future, there's just too much at stake for them to just pull up right now. But if they did, that would be as massive of a currency move as we saw during the pandemic back in March of 2020. So I'll put it in your quiver of arrows, right? All right, so we talked EU levels, EU levels. Could you possibly show your Alexander Einstein settings? Rick, the books are on my Telegram channel. Please tell me everyone listening to this call, whether it's listening to the recording of it or not, is subscribed to my Telegram channel, please. What types of market would you put in years next thing, trending or sideways? So, Marta, if you came in a little later, I'm basically looking for the markets to head in a what I like to, I don't call it sideways. I know that's sort of what it looks on the chart pattern, but I call it a basing pattern. So you're putting up a tight range we're bouncing between essentially the 21 to 23 area on euro. To the GBP question I got, notice what happened on Friday. I think obviously, getting closer to hopefully get everything completely ironed out in Brexit land. It may never happen. I hope it does. But we came up, peaked above a resistance level just under the 3650-ish area and dropped right back down. So it'll be interesting to see if we head higher and break out of this, which would put us way back. I'm actually going to have to go back to a weekly chart to see where we'd be heading. So this is a weekly chart. And I would think that right in this whole range right here, 40. So right under I'd say 40 to 42 and a half, somewhere in that area would be the range I'd look for us to be magnetized to, which is typically the case if you break a fairly long-standing support or resistance point. At some point, you're usually going to trade up to the next level. So what does that mean for those accepting manual trades? As I've said a bazillion times, and we'll continue on that theme, anytime something breaks from a solid base, it has a tendency to move towards the next big area. And in some cases, the move up into that area or down can be parabolic. So fighting that trend, what I like to call standing in front of the freight train, your win rates are always lower if you're fighting the trend. All right. I'm not sure about that yet. In terms of live accounts, whether I'll be turning my softwares on and waiting until next week, I'm not really sure. More than likely, I haven't really had a lot of my big live accounts on for the last 2 months, and I probably blew it. I mean, I probably should have joined Narrow's team much earlier, right? And just been in trading. So one of my new plans as far as my reworked business or time spent on businesses, I'm going to get back into some manual trading at some point in the next month, and I will allocate a certain amount of time each morning to that. So probably looking somewhere in the area of about, I don't know, 6 a.m. Pacific time to 8 a.m. Pacific time to be in front of the trading systems, taking trades and all different kinds of stuff. I have I have 5 other screens that I'm hooking up, but it's kind of a pain. So I'm not sure what I'm going to do. I know I'm missing opportunities. I get it, but there's only so much of Stevie I can stretch in a day between 65 clients and 2 other businesses. It's just driving a lot of work. So, UK accepted the deal. European individual countries will start voting on it in the coming week. And expectations that they will all agree. You know, I love this post. This is something I hope happens for everybody's benefit in Europe and all over the globe. Let's get all that stuff passed. Let's get some solid trade deals set up between all the countries and move forward. Next question. Yes, Happy New Year. Thank you. 2 books. Get a couple questions on this one. Let me see if I can show my Telegram. Actually, before I do that, and remind me if I forget, I want to show this right here. So if you guys don't know what the AP Academy looks like, this is it right here. I'm sharing this screen. Yeah, there we go. This is the AP Academy. You know, you want to go in and complete all your stuff, just like you see here on the right. You know, I know this probably seems laborious for some, but heck, I even learned some stuff in here. It's like stuff I've forgotten. I probably should have. You know, you really got to go through this. And what I'm about to do this weekend is the next one. So I'm going to go through the whole AP Academy on Arrow. Okay. So you go in, you just click. This is the main page here. And you go in, you just start on the overview first. And it'll bring you to this page. And I love how they have this layout done. I think this is fantastic. So I'm going to go in and go through all this stuff, get a couple of instances set up live with one with each Forex broker I deal with. And then I'm going to throw a bunch of money in each of these accounts and start trading this exclusively. This account will be traded only in Arrow. So I'll hook it up to a MyFX book. I'll be able to show it to you guys. And even though I have asked many times to the group that somebody would show us some MyFX books from just trading in Arrow, I haven't seen anything from anybody yet. So either y'all are lazy out there, or it's, you know, it's tough to hook up a MyFX book to a manually. I just actually disagree with that. So I'll break the mold and I'll set up my own FX book. What else do I want to say? So that's that. And then we shift over and show. Actually, I'll just drag it into the screen here. So this is the Arrow Telegram channel. I hope everybody subscribed to it. It's actually really good. So Nathan runs his calls on Sunday, 10 p.m. Eastern time. So that's 4 a.m. CET for folks in Europe. And then what I really like about all, and I wish this existed for some of the other software as well, is there's a Telegram channel for just the chat related to Arrow. There is a ton of members in this group that are very actively talking about all kinds of factors going on that you may not have thought about. So I'm not going to peel through all this, but occasionally I'll just poke in when I'm sitting in traffic or, you know, it's some sort of boring event that I usually get forced to attend during the holidays. I'll just start poking through some of this chat and just looking at it. It's just a lot of really good stuff in here, guys. It's really can help reduce risk. All right, so let's see. You got the 2 books. Let me show that as well. Now, note I always forward what all the developers are saying in their notes. So just remember that. Do keep in mind switch reminders on Friday. So this first book is Khan's technical analysis right here. It's just links to Amazon. You can buy these damn things anywhere. If you could find them used, good luck. Maybe you could find them on eBay or whatever. But Both these books are really good. They're not difficult to understand, and they are, an introduction to technical analysis, plain and simple. You don't have to memorize all this, but I think it's a good way to, because when they say education is the key to understanding, right? But it's also a pretty big key to reducing risk. So if you're comfortable with something, or you get into the studying of something you're uncomfortable, maybe it'll allow you to trade on, um, a demo for longer. I do know that with our team, we are moving in a direction to actually having a 90-day education period, with some of the licenses that get purchased, to actually go through and spend some time educating instead of just, doing a demo for a couple of weeks and then getting into a live account. We're finding that even though there may be some hesitancy from newer subscribers, we're again trying to just play a risk management role and making sure that all the members on our team have gone through all the courses, all of the Days A. Duncan's really good material, and then set up a demo account or a sim account where you're trading in simulation, for a period of time. All helps to reduce risk. All right. I think that's pretty much everything I wanted to say on this call. Yeah, Anonymous, my my wife's made honors, an Ohio State Buckeyes alum. National championship. Anything else I want to cover here? Let's take a quick look in the rest of these currencies. There's Euro JPY. Let me just go quickly to a daily chart. Tight range. Okay. USD JPY continuing in the trend. USD CAD balancing down towards the low, going to a weekly chart. This is pretty much the cliff right here. It's a potential. If we get through this area, we're probably going to be sailing down to 24 area. So just know that if you're trading this. GBP NZD, the wild dog. And by the way, for what it's worth, guys, Dasan removed NZD from variables recommended list. I personally have told everybody that I deal with that I don't trade NZD. Okay. It has been, how can I say this in a PG environment? It's been a tough currency to hold on to, if you will. This has blown out a lot of accounts in the last year. So I'm not a fan of it. I can't really put solid technical analysis charting on what's going on with it. It has wild moves. And quite frankly, this, in my opinion, unless you truly understand how this currency trades in any aggregate of another currency, I don't trade it. For the question on oil, here's oil. Doesn't really pertain much to currencies, but daily chart on oil, I think we're probably going to be seeing the mid 30s again. All right. Let's see. Let me just double check quickly in our chat, see what's going on here. So does somebody want to post the Telegram link to the arrow channels? They are available in the back office. I don't have them readily available. Somebody wants to post them out to chat, that would be nice. All right. That's pretty much everything I want to say. You guys have any other questions? Anything else? No. Going once, going twice. Make sure you get into. There you go. See what I just did? I clicked on the link. It's Telegram. You just click open with Telegram just like that. Boom. Shows right up. Download Telegram for your mobile phones if you could too, guys. It's real great because, if you're stuck somewhere waiting for something, a doctor's office, there's like a bazillion periods in one's life that you could just be ripping through educational material, right? And if you have it on your phone, if you have a smartphone, it's really great. Just if it annoys you with all the dinging on the app, just go into the settings and turn off all the notifications for the different channels you're subscribed to, or turn them on depending upon which software you're using. But you can have only the important ones. Anything related to corporate or any of the softwares will actually ding on my phone. That's a lot of dings, by the way, throughout the day. But I got to stay pretty plugged into what's going on. But you can turn them off. Right, so we got, yes, Happy New Year as well. You're welcome. All right, cool. Very nice. Thank you, everybody, for attending. Share the education. Tell them about my calls. I can tell you the vast majority of people that have not paid attention and or not accepted the right trades or accepted risky ones and just really didn't know what were going on. In many cases, they also were trading with capital they could not afford to lose. Very rarely attended my calls. So there is a direct correlation between true accountant blowouts and not attending Steve's calls. So just keep that in mind. Other than that, wish everybody a safe and happy 2021. My name is Steve Vetterl. Off the mic. May the trades be with you.